June the 8th, Michael Vaughn with Brian Acker. Well, I mean, we're approaching the halfway point of this year. Could you describe the year to date?
Yeah, just like the last 3 years.
It's true, isn't it?
Ran up, about 10%, or most portfolios, let's say, we're up, 5 or 10%, depending upon your asset allocation, and then we watched it kind of erode away until obviously yesterday, and a little up today, little green on the screen. So.
Well, it is still all about debt. It's about Europe largely, and there's some funny things going on over there now.
Yeah, that's I do have some props, courtesy of Michael Vaughn, just over there. But yeah, we're just looking at euros. They are telling me on street level that there's a country code on every euro. So for instance, on Michael's euro 50, it's an X. So, not that anyone can see it, but that country code designates Germany.
Yes.
So you were in Germany, you got a German 50 and the X code. Now, I hear people are hoarding these because actually each country has its own central bank, and so
its own code, and in fact, the other euros that I had in my wallet.
So let's look at this. So this is a country code N, which is Austria, which is about the same as Germany, I would say, which is good. Oh, but what do we have here? The Euro fiver with an M, that's Portugal.
Uh-oh.
So maybe you got slipped some bad money, some Canadian Tire money, actually.
What's the code for Greece?
The Greece, as we looked up on the internet, is Y.
Y. So
yes. So I have a friend going to Spain. Michael, you're going back over to Germany, and what I'm fascinated to know is there premiums and discounts already appearing on street level?
Yeah.
You'll never read this in the FT, but it's, the cab drivers know everything.
I will report back what I get in my change.
Oh,
if
very
I'm getting,
good.
The Greek notes back. If I put that X in and I get the Greek notes back.
Oh, so there you go. Yeah, so little fascinating arbitrage that you only get here at Acker Finley.
But this does point to a larger issue, and that's diversification. Why
Absolutely.
It's necessary, and maybe the risk isn't
Absolutely.
where we think it is.
So with everyone on here at Acker Finley, and I know everyone focuses on the equity side because it is volatile, and seemingly on the other side, fixed income, doesn't move at all. You have to be diversified going into this thing. So for instance, even on our US fund, we just lowered a bit on the hedge because we want US dollars here. And again, thinking from a portfolio perspective. You want US stocks, you want US dollars. On the Canadian, you have Canadian equities. We're largely a commodity based, and we do have commodity companies in our portfolio, but you want those. But when you look at overall your asset allocation, you want basically a smattering of equities, even 50% equities. I think it's fine, divided by Canada 25%, US 25%, now largely in US funds, and the other side obviously fixed income. And there could be actions that when you wake up one morning, those equities could be up and up rather large. Yeah. So
and if you want to be in cash, what if your cash turns out to be the Greek euros or the Portuguese euros and you don't know it?
You think you're safe in cash in this volatile world? I'm here to suggest maybe that is the risk asset.
Yeah.
And fixed income, the way it is now, is, and I should calculate what the if interest rates at these low levels move 1%, you're probably looking at anywhere from a 5 to 15% loss on your principal. So the risk here is not on the equity side as I see it. It's on the fixed income and currency side in terms of your portfolio. So again, diversification is key. The central bankers will figure this out. I'm very confident of that. Why? Because there's 7 billion people in the world and we don't want a Great Depression too. And just as long as you're diversified, you'll be okay.
That's so interesting. When you're putting it back to the central bankers and you're saying, well, the political deadlock doesn't necessarily have to change before a solution is found.
Absolutely. This is theater. The politicians are theater. All the work's being done intra-agency, central bank-wise. I'm sure the video connections between the conferencing between the central banks, I mean, it's just, I mean, those wires must be red hot. Even just look at yesterday. Europe did nothing on rates. China came in with a surprise cut. All this has been coordinated. So yeah, they're in behind. They're the ballast on the other side of this. Europe, I think, is, Germany's playing brinkmanship. They're using this crisis maybe to get these countries back to working again, to be more productive. If this is going to be a united Europe after all, all that has to be addressed. But I got to encourage you, this is just math. Math and the value of this. And there are forces on the other side that can put a value on this, that this can change, just like the stock market. So again, just from the point of view portfolio, you've got to be diversified to take advantage of any eventuality that may happen.
Keep thinking 3 steps ahead. I think that's what we need today. Brian, it's always so interesting talking with you. I'll see you early in July.
Great to see you again, Michael. Thank you.